Hello and welcome to Pro Trader Strategies Market Commentary for Friday, October the 25th. My name's Eric Wilkinson, and yeah, you might recognize me as the Wolfman from mainstream media. What I'm here to do is talk about the markets, teach you guys some different option strategies, hopefully, and more importantly, though, is show you how to implement those strategies, and if they go wrong, how we manage that risk in and around those trades that aren't really working around. I'm not here to cherry pick any trades. I talk about every single trade I do, when and where I do those. Also, please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data. Really not a whole lot to see here on economic data front other than we got the University of Michigan consumer sentiment coming in line with expectations at 95.5. It was expected to be 96. Inflation expectations out of the University of Michigan survey came in at 2.5%, which is right in line with what everybody's talking about. All right, let's talk about the markets. We got the markets really moving higher today across the board, other than the bonds, I guess, really. Crude oil moving up a little bit today, 12 cents. We are right there at the point of control, and that's where we've kind of expected our range to be going forward. The economic picture, we're seeing some decent earnings coming out. More about the trade talks, maybe actually putting pen to paper on some of these deals. All of that stuff is getting a bit of a euphoria in and around the markets, and it being a Friday, the markets, people putting money to work into the equities. So we're seeing some movement higher there. Like we talked about with crude oil, gold back above 1,500 a troy ounce. One thing to note, though, this is looking a little dodgy here at the top on this move, especially with the equities moving higher, people probably pulling some money out of that safe haven. I still think that the weaker dollar will cause this market to move higher, and we could see it move it with the equities. But here's what we're talking about with the gold futures right there. That top usually signals we have kind of exacerbated that move to the upside and starting to lose some control of that bullish sentiment. If we get something with a bar like that, obviously that would make me believe we are going to come down and test this value area high here. When markets get above that value area, we usually start to see a little bit of that momentum loss, but in that we've been really seeing a couple of volume nodes happen here right around that 1,500 a troy ounce that we've been talking about so much, that psychological level, people really putting money to work trying to defend that level to the upside. And you know, obviously if you are fading gold, you're trying to get it back below that 1,500. We don't have any Fibonacci's or anything else lined up with that, but that is something to note for sure. All right, we've got bonds coming off back below that 160 handle. I was expecting us to really kind of hold on to that. People are really starting to believe that the Fed is not going to lower interest rates at all at this meeting next week. The way that the economic picture is looking, these earnings coming out, they may very well hold off lowering interest rates. I think it would be a good idea to lower interest rates, get that psychology of the consumer believing that money is a little bit easier, they can free up their purse strings, especially heading into a holiday with you know, Christmas coming around. I think that that would be a good thing going forward here. People have been seeing some of those housing numbers, refinancing numbers hold off. They're waiting for this possible interest rate cut. You know, I think that they should really go through with it, despite the fact that, you know, equities are moving very close to all-time highs here. And, you know, I think it needs a little bit of a kicker here. The economic picture here in the United States isn't so bad, but we're starting to see a bit of that slowdown. I think of a quarter basis point cut, although it isn't really a major enough of a cut that it's really going to spur a whole lot of spending and things of that nature. I think it's more psychological for the consumer, and at this point where everybody is teetering, it might not be a bad idea. All right, barely holding on to the teens here in the VIX. With the Dow Jones up almost or a little bit over 200 points. It's seemingly being the one that is the lagger, as we're seeing the NASDAQ up over 1.33%, really. I was going to say 1.25%. We are piercing above this value area high. Thing to keep an eye on as we're looking at this stuff here is that we have pull out the extended hours trading. You know, that is going to be the line in the sand that the day session is going to want to get to, and that is, let's say, 80.52 would probably be the number. I don't think we're going to get there today, but that is something that the markets are going to be looking at for an all-time high here. And E-mini S&Ps probably would have an all-time high here. We're back above 3,000, as you can see. We settled above there on yesterday, up another almost 19 points. We pull out the overnight. Again, we are looking at 29.50. So, you know, 30.30 would be a number to really look for a all-time high, where that's not too far away. Another 7 ticks to put that market into perspective there. And that was printed during the day session. So we are looking for 30.30 really as an all-time high, I think, is what the market would try and print. We are above the value area. It's going to probably start losing a little momentum as we start approaching that 30.29.50 area. So keep that in mind. Market might spike up there, hit that. What I was saying was this market probably would be an all-time high, but Amazon really putting a drag on it. It was down about 40 points earlier today. Actually, it was down even more than that. The last I looked was down about 40 points. All right. See, we're losing a little bit of the steam. I think there's more profit taking going on. You know, with that much of a rally, there is going to be some type of profit taking happening as the weaker hands kind of shuffle out of their position, especially heading into a weekend as those day traders start to move. All right, McDonald's. You guys remember this? I did this for an earnings trade. Gotten slapped in the face with it for the most part. And I was in the November, and I had sold the 205 calls in there. Obviously not working out very well there. And then I went in and sold, for the earnings trade. What did I do in McDonald's? Sorry, I sold the 200 puts for the earnings trade. Now, that market blew through that. I went in and covered that trade by selling the 205 calls in there. So I wanted to create a strangle in case that those 200 puts got assigned to me that would make me long McDonald's at 200. Well, so I sold those 205 calls, kind of make that a cover of the trade, lower my break even a little bit. Those 205 calls I sold for just slightly over $1 there. Well, obviously the market's continued to move down. I think it's a little bit ridiculous. I threw up a 3-year Fibonacci here, and you can see we came down and kissed right on that. We're basically sitting just above that Fibonacci right now. At 195.68, the Fibonacci being 195.50, let's call it. And it's a pretty dirty throw up there on the Fibonacci. I didn't make the exact to the numbers there. So those 205 calls that I had originally sold for $1.07, I basically bought back for 29 cents today. So lowered my cost basis, lowered my basis on those 200 puts, where I might actually get long or assign those McDonald's calls or those McDonald's puts. So I would be long McDonald's at 200. And having said that, I think this is just way overdone to the downside. So I basically rode those 205 calls, got out, bought the 185 puts in there for 29 cents. So if we start breaking down much further and come down to this point of control here, which is very close, that would be where I would look to be buying more McDonald's, because I think McDonald's is just, like I said, overdone to the downside. The market just spanking it right now. So I think it's a good opportunity to get in, and I'm going to dollar cost average that if all else fails. All right, Gilead. I did this for an earnings trade. Not looking too good right now. I'm going to hold on to it though. I did the November, so you know, this is me going back and forth. Usually I do the weeklies. Probably luckily I did this with the monthly. Not too many days left to go with this though. Did the November, sold the 64 puts in there in Gilead. How much did I get for those? Sorry guys, I'm losing track. 91 cents. So last I checked, I was losing about $1 on that trade. I'm looking for that to obviously move up, but I'm not going to do anything today unless we get it back up into that 94 handle. If I get up into that 94 handle, I actually have an order working on. I think it's for about $1.29 or something like that, which was about the low I saw right when this market spiked off the open. I missed that opportunity to get out of those, so I got caught holding the bag on that. I was looking for a scratch, didn't happen, and the market fell out of bed on me, and I'm holding on to those. All right, so Intel, I actually did two separate trades in here. I did the weeklies in the October that expired today and the November, and with the October weeklies, I sold the 50 puts in there for 44 cents. In the monthlies, the November, I also did the 50 puts and sold those for 92 cents. Respectively, I bought back the weeklies for a penny and the monthlies for 17 cents. Nice win there. You know, I could cover Gilead and it would be a scratch for the day, but looking for that market to move higher, and I'm going to hold on to that because I think Gilead also is a little overdone to the downside. All right, a lot of the tech sector really booming. Intel talking about you know, their forward guidance is looking really good. A lot of they believe it's a lot of consumers just holding back on a little bit of that spending because of all of this China and everything else going on, and they believe that things are moving forward with China as well. So you know, that forward guidance really caused Intel to make a nice big pop. That's all I've got for you guys. Check out yesterday's webinar. It is on the put diagonal. I go in all of the rules as to how to implement that properly to increase your probabilities of success. There's always a bearish market out there, just like, you know, if you believe McDonald's is going to continue down and you don't buy my position on that, then that would be a great opportunity as a long-term bearish assumption on something like McDonald's to take advantage of the long put diagonal. So check it out. If what? Go to ProTraderStrategies.com. Also follow us on Facebook at ProTrader Strategies. And if you can't take that, take it easy.